All right, all right. Hope you are doing well and getting ready for New Year's Eve. I'm sure many people are getting ready for the holiday. Hopefully, you've had a great time with family. Love that picture back there. Hopefully, you've had a great time with family. I know some folks are positioning themselves. They've been off for Christmas and here for New Year's. Our team, they've been working this week and wrapping it up here for the New Year's Eve, and then back at it no doubt on Monday. But wanted to just kind of shoot some thoughts that we've been talking about and kind of put a little bit of a punctuation on it here as we close out 2025 and look ahead to 2026. So again, one of the things that has been the drumbeat that we've talked about now for a good Lord, almost 2 years, is that interest rates are going to be higher for longer. Now, we've thankfully seen the Fed cut interest rate several times, including at the last meeting. And then they've kind of signaled, hey, we're expecting that to slow down for next year. That being said, you look at some of the factors that are moving them apart. Donald Trump. Donald Trump has been, hey man, lower rates, lower rates, lower rates, and yes, they are appointing a new Fed chair in May. But the reality is that the Fed, they're looking at additional information about what's going on with inflation, what's going on with the jobs and unemployment, what's going on in the overall economy. And so, it's really what I would say is a bit of a mixed bag in that, like you saw, inflation numbers just came in recently and they were lower than expected, which was, good news, caused the stock market to rally a bit. And again, nowadays we're in a trader's market where, so much money is moving and shifting in the market that you see that kind of information and you see the stock market pop up a few points and it rallies. But so what does that mean? You've got inflation that is looking better. It's still not at the 2% target, what the Fed has indicated. Now, again, in part of their policy statement earlier this year that they reformed, they kind of acknowledged that the 2% doesn't have to be a fixed and moving target. That was a previous target. So they've softened a little bit on that. So God willing, we see inflation still moderating and staying at a good place. We saw the unemployment numbers tick up a little bit in the latest data, and some of the data were skewed because of the government shutdown. But so then, unemployment ticked up to the highest level that it's been at 4.6%, and even higher among African American families as well. And so this also then begins to be an area of concern for the Fed, where they say, okay, hey, we need to keep our eyes on the jobs and ensure that jobs don't just slide off, because that can happen fairly quickly, that we see just a runoff of unemployment, more people being laid off, and then that can move quicker than the Fed's response. Because understanding when the Fed cuts rates, it takes time for that rate cut to enter into the system to affect lower cost and greater incentive for businesses to borrow money and use and expand, etc. The third element that we saw was just the surprise numbers for the GDP for the previous quarter. That was really a super strong number that came in and really surprised everybody. And so, you've got this kind of mixed bag, if you will, or complex scenario where you've got growth doing better than expected. Trump continues to champion the fact that, hey, growth's going to continue to improve with the effect of his tariffs. Now, again, everybody initially, when he put the tariffs in place, was saying, hey, it's going to affect inflation, it's going to affect job cuts, and it's going to affect the employment. And we hadn't seen that in a dramatic way. He was saying, again, he's using it in negotiation, he's using it to bring more money back, bring jobs back, bring manufacturing back. And so far that has been a measure of his impact, and there's still several $1 trillion coming into the country as a result of those negotiations. So moving forward into 2026, it's going to be a little bit of a stickier thing with respect to the interest rates and job creation, looking at those numbers and looking to see what the Fed's going to do. What I would suggest is that they're going to be a little bit more tepid, no doubt, in terms of rate cuts, as they've alluded to. The new guy that comes in May, maybe he's a little bit more on the bandwagon, but good Lord, that's half of the way through the year. God willing, inflation will continue to moderate, and that's going to be helpful. Growth doing well, and then this is kind of the, a little bit of the oxymoron, so to speak. Growth doing well for the country and the economy is good overall, but it also is counterproductive to the thought of lowering interest rates, because lowering interest rates means, hey, you're helping to stimulate the economy. If the economy is already growing well, then it doesn't need further stimulation. So that being said, I don't see interest rates moving that much, especially in the first half of the year as well as through the whole of the year, apart from some dramatic change. Now, that being said, what we talked about before, the real opportunity is going to be not looking at and just banking on lowering interest rates. And that's going to happen over the next, call it 24 to 36 months. But it's going to be the distressed opportunities that we've been talking about. And this is where, again, some people have been burned in the area where there's been difficulties in the commercial real estate sector and multifamily. But this is also where the opportunity is going to lie. It's already presenting itself. And so in 2026, I'm telling you now, that is going to be the place to be able to capitalize and take opportunity. It's going to look different than it did before. And yet you have to be, ready, able, and willing in position to be able to take advantage of it. So I pray that that finds you well and that you have a blessed New Year's, and also that you are in a position to take advantage of those opportunities that are coming in 2026. Thank you so much. Have a blessed and victorious week, for this is the week God has ordained for you.